Good, good, good.
All right, it is Mike Doyle with the mortgage firm, Wellington Lake Worth, and it is Wednesday at noon. So as always, I am here with Elizabeth Lopez and Tom Bennett. Elizabeth, been working with her for 10 years, been in the industry for 20 years, top manager at Regions Bank, if you haven't been here before. Tom Bennett, old school customer service. So Tom's been doing this for as long as I have, and we've been with the mortgage firm. I've been with the mortgage firm for 11 years, and we've been in the Wellington branch for the last year or so. So we're the purpose of this is just sort of an open forum. Bring your questions. We'll answer any mortgage questions you have on Wednesdays, and we also cover a topic. So today's topic is going to be, down payment assistance and some changes really within the within the first time home buyer arena. So there's a lot of neat things that are coming up. We'll cover those today.
Yeah, there's some changes coming down the road a little bit for the Hometown Heroes program that has not taken effect yet. We'll maybe touch on a little bit, and maybe a little bit if we have some time about some loan level pricing adjustments that might be coming up over the next couple of days.
Yeah. So one of the things that we'll talk about is Governor DeSantis and the Florida legislator have passed Senate Bill SB 102. And what this does is it gives us it's $711 million that's going to be put into the system to really encourage first-time home buyers and different like lower income groups to be able to have affordable housing. So the Hometown Heroes program was one that was set up for people that were in what we would consider different types of hero classifications: nurses, educators, law enforcement. It was a very expanded group. They put $100 million into that about 10 months ago, and they've run through about 80 million of it. So that's with that select group. So they've refunded that with another $100 million, and we'll go over some of those changes soon. So we expect that to go very quickly, but they've also have another 600 million that's going towards other types of programs. So they're doing trying to help developers be able to build housing for individuals, and also, carve away some of the housing for lower income groups, and also for first-time home buyers. So they're also opening up over the SHIP programs. I think, Tom, you used to do the SHIP programs too. I used to do a bunch of them back in the day, and it allows municipalities to go ahead and get some of the money and try and get reinvestment in some of the areas that they want to go ahead and show improvements. So they would like to start encouraging growth and new construction, and people to come moving into certain areas to try and improve areas and make it so that money's going to go into the SHIP type programs. Okay.
What we're seeing is that from what I'm, we're all kind of reading or gathering, that the motivation for the government to be offering some of these, again, home ownership is one of the biggest means of financial independence or wealth, whatever you want to call it. But that's the reason, since the home, since they can't do too much about what the prices of the homes are doing, they're really trying to come out with new loan programs to help buyers get in the front door.
Yeah, and there's a lot of different programs that you guys will find, and we'll go over quite a few besides the Hometown Heroes and the bonds, and just a few things that we have lined up, and a lot of them just make sense. And I know we say this over and over, but just know that if it seems like the right type of program for you, then we'll make sure to explain it. But it's not a one size fits all. So we want to make sure that everybody is being put into I guess the different types of programs if it applies to you.
Yeah. Now, go on, Tom.
I just want to break something down real quick while we're all looking at the screen. So this is the Florida Housing Finance Corporation. So this is Florida Housing. They're the ones that come out with these programs. So during this conversation, you might hear us talk about bond loans, Heroes loans, other first-time buyer loans. Those are all created basically by Florida Housing. They then disperse those programs to us under different names or products, they call it, and then we turn it over to the borrowers. But all the ones we're going to be talking about are coming from Florida Housing.
The new set of money for the Hometown Heroes is going to go into effect July 1st with some updated conditions. So the new set of money is not available until July 1st. So for the people that fall under those, that are accessing that money, probably not going to be able to close those loans till mid-July, end of July. Now, we're going to cover a little bit down payment assistance. So people refer to DPA. Whenever you see DPA, it's down payment assistance. Reduced mortgage insurance. So mortgage insurance is if you don't put 20% down on a loan, you're going to need to have mortgage insurance. And the purpose of mortgage insurance is it really protects the lender. So if you put $20,000 down on a $100,000 loan and you end up not making your payments, by the time the lender or the investor is able to foreclose upon you and get you out of there, hopefully they haven't spent more than $20,000 in legal fees, late fees, all the other stuff. So if you put $20,000 down on a $100,000 purchase, they're going to get their money back. If you put $5,000 down and you get a $95,000 loan, by the time they get you out of the house, they're going to lose a lot of money. So you want to make sure, so the lender requires you to have mortgage insurance to protect the lender or the investor until you have 20% equity in the house. Now, on an FHA loan, it doesn't matter how much you put down, you're still going to have mortgage insurance.
And a lot of the pre-approvals that we've been doing, I know there's a huge difference. So the mortgage insurance, like we've said before, like it does have to do a little bit with your credit, how much you're putting down, like what I said. But I've come across, a few cases where I will, give a conventional pre-approval as well as an FHA, not saying that one is better than the other, but the mortgage insurance is making an impact on, even the monthly payment. With FHA, just giving you a better opportunity, I guess, of a higher loan amount possibly. So when we present FHA conventional, it's not really I prefer going conventional or I prefer going FHA. Sometimes I think it's one may be more beneficial than the other. So you may be paying less mortgage insurance now with FHA versus conventional in some cases.
Yeah, and I will say it's a great point, Elizabeth, and the FHA has reduced the mortgage insurance, which we'll get to shortly too. So.
Mhm.
And what Elizabeth was pointing out is FHA has a fixed formula for mortgage insurance. FHA, which is the Federal Housing Administration, sets fixed numbers for your mortgage insurance. When you go to a conventional loan, those mortgage insurance policies now are by private companies. So they set their own payment graph or payment schedule or whatever it is. So that's why Elizabeth is saying maybe with FHA it might be a little bit lower. Because if you've got a fairly middle of a 620, 640 credit score and you're not putting down a lot, your mortgage insurance from the private insurance company might be substantially more than the mortgage insurance you're going to collect from FHA.
Yeah.
All right. Now, the regular Hometown Heroes program, the money isn't just for down payment. You can use the money for down payment. You can use it for closing costs, prepaids, and escrows. So it'll go 5% of the loan amount. So let's say you have a $400,000 loan. So on a $400,000 loan, you can get $20,000, which is 5%. Now, if we're doing a first-time home buyer program and you're putting 3% down. So let's say you're putting 3% down. So that 5% that they're giving you is going to cover your 3%. And then there's another 2%. The 2% that's left over will help you with your closing cost. Mm-hmm. So what I tell the customers is, if you've got 2%, and maybe there's a 1% in seller concessions, which may or may not be out there. We're seeing it a little bit, not always, but if you have 2% and 1% in seller concessions, you can get into a place. So a $400,000 house, depending on the situation, how the contract's written, having a $10,000, $12,000 could potentially get you into that house. So it really does open up the opportunities for people to be able to buy a place, that may not normally be able to buy a place, especially those that don't have, gift funds, family to be able to help them out, because so many of our purchases that we do now are from buyers that have gifts from family. So if your family doesn't have the money to give you, there's a great way to get in.
Now, the borrower still has to provide the down payment, the deposit, the earnest money deposit. Again, these loans fund once you close. So if I'm going to buy Mike's house and Mike wants $5,000 of an earnest money deposit, yes, I have to provide Mike with that $5,000 so he takes that home off the market. But then when I close, now I'll get, a portion of my $5,000 back from my first and second loan. Make sense?
Yeah.
All right.
All right. Previously, Hometown Heroes was first-time home buyers with certain hero classifications, which we said firemen, teachers, educators, a lot of medical, all veterans. Whenever we refer to any of the Hometown Heroes, veterans all qualify. Doesn't matter if you have a couple houses, multiple houses, it has to be your primary residence, but veterans all qualify. And it was 5% of the loan amount up to $25,000. Now, though, starting July 1st, the guidelines have changed.
Yeah, so now we're looking at pretty much the additional 100 million going in into the program, and then now it's open to all first-time home buyers and veterans. So it's not just the list that we kept referring to, that we just kept saying, go back to the list. If your name is on there, send us your certificate, send us whatever. Now it's open to all first-time home buyers.
Mm-hmm.
And still, it's 5% of the loan amount up to 35,000. So it's not that you're getting the 25,000. You're now not getting 25 going to 35,000. It's up to 35,000, 5% of the loan amount. So the income also, the qualifying income, it's very
stating that too loudly. I'm hearing different stuff on that. So some of those things are still out, but I believe the qualifying income might increase a little bit. I'm not positive about that.
Yeah, there's still a couple of things, I guess, that we're going to be getting clarification. It's still, wrapping up April now, but there are a few guidelines. Tom and I were talking about this earlier this week. But there's a couple of things that we're still looking at. We've gotten a few questions on self-employment and a few of those, things. So we're just waiting on the guidelines. And you're right, Mike. Some of these things are just kind of, we want to talk about it, obviously, because there's going to be a change like right around the corner, but we also want to make sure that we're giving you guys the correct information. So yes, some of the guidelines we're waiting on.
Well, sorry, go on, Tom.
Right, I'm just what Elizabeth is saying. We're waiting on, meaning the industry, not the mortgage firm. So if you might hear things out there in the outside world, well, we already have this program. Well, we know nobody knows what the final guidelines are until they come out. So the whole industry is waiting to see what these guidelines are going to be.
Yeah. Now, the one thing of interest that is interesting in this program is it's qualifying income. So I think in Palm Beach County, what is it? $138,000 is the maximum qualifying income. So if you have a salary of $150,000, you're not gonna have access to this. But if you have a salary of $138,000 and a bonus of $200,000, if $138,000 is enough to get you to qualify to buy the house that you want to buy, you're good. You're good. You have access to this program. If you make $138,000 and your wife makes $138,000 or your husband makes $138,000 and we're only qualifying underneath one of you, then you have access to this money. So it's a big difference from bond money where we add up everybody's income in the house. And if it takes you over those guidelines, then you're not allowed to have it. So, we might only be qualifying you at $50,000 a year. But bond might see your income at 70, and then they add up your children, and your uncle and your mom, Social Security, and it puts you over the number to where now you don't even qualify for the bond money. So the Hometown Heroes is interesting this way.
So the Hometown Heroes is a second mortgage. Again, we'll just reiterate what it is. It's your first mortgage that you're going to be having. And then with the Heroes is a second mortgage that's no payments, so no interest. So in your calculations, we don't include any monthly payments. That 5% of that second loan has to get paid back once you either sell the property, if you refinance the property, or that property no longer is your primary residence. In other words, you're going to retain the property and keep it for an investment property, but you no longer got to live there, or if there are any title changes or changes of ownership on the property. Other than that, the second mortgage, there's no payments calculated, no interest on it, nothing you need to pay back until one of these 4 events typically happen.
Just to reiterate the income limits, here we have St. Lucie County, 120,000, Palm Beach County, 138, Miami-Dade, 146,250. You can see that income limits here. Now, when you look at loan limits, FHA loans, 500, 250,000, Palm Beach, Broward, Dade, 557, 750 for FHA, and then conventional loans, 726, 200. So this isn't just for, lower income and, very inexpensive places. This is for, what's, median income and above pricing in these areas.
Yeah, it's definitely opened up, I think, a lot of doors for this. And I will say, like, I do a lot. I have a one of two of my realtors that are very, very active in Port St. Lucie. We just ran into the situation where we originally started looking in Palm Beach County and then all of a sudden jumped to St. Lucie. So you kind of got to take a step back there for a minute and kind of see, what's really going on with those income levels. And, so it's really important that we know where exactly you are purchasing, because a lot of these, because of the bond and the Hometown Heroes, they do have different limits for income as well as the maximum loan amount. So please let us know if, I get it. You may change your mind, but I've had like a couple of people that actually go from the West Palm Beach area to Port St. Lucie, which is perfectly fine and totally understand, but something like this can throw you off and then all of a sudden not make you eligible for it. And again, just because of the guidelines that were given.
Mhm.
And that's why we ask all the questions. We're just asking the questions just so we can get you the right loan to get you to close on time. So
Yeah. All right. Now, one of the things too that I do like about the Hometown Heroes is the pricing on it is good. So, we have other programs that have down payment assistance, and you're thinking, oh, that's great. They're going to give you some money. And some of them might even be forgivable, where they'll give you a couple bucks and it's forgivable. But then you look at the rate's a percentage point higher. So I haven't one I was pricing out, and you're looking at charging the customer a point, and the rate's in the sevens. So when you go to Hometown Heroes, FHA 6.25 no points, Fannie Mae, which is conventional, 6.375 with no points. And even, if you're above area median incomes, you're still looking at 6.375. So it's a good program. And if you come down to the bottom, the bond money, FHA bond money is pretty good. Bond only gives you the $10,000. And if you do the bond money with Fannie Mae, it is 6.75. So your rate's not as good. Now, I'll tell you what, as the limits increase for the new Hometown Heroes, and it's because it's increased to $35,000 and it's opened it up to everybody. I'm not sure, Elizabeth or Tom, do you have any thoughts on when the bond conventional might be preferred over the Hometown Heroes conventional? Yeah.
No.
Yeah, I can't think of a time.
Yeah, I mean, I started looking into that also, and then besides the rates, it's just also the limits as far as even income and everything are much higher on the Hometown Heroes. I think the other one that we were doing, it was more of if you could qualify for one thing, and it was almost like a backup. But this one, I think, is opening up to so many people. I don't see us doing much bond anymore.
Yeah. Well, we'll see. I mean, the money could go quickly though. So if the money goes quickly, I can see probably a little bit of bond towards the second half of towards the end of the year or towards the beginning of next year.
And
Now with the bond, go on, Tom.
Sorry, just to be a little bit on that note with the money going quickly, you can certainly reach out to us now, and I mean now, and start to get the loan application started, just so we know if that money's going to go quickly. We certainly want to get you into the system, so when you're ready to go ahead and close, that money's there for you. So yeah, you can certainly reach out to us, and we can at least get the ball rolling and get your application underway.
Yeah, you want to give us time to give you some tips on credit. You know what? It's nice. It's always nice when you come and you're a couple months early. So we do a soft credit pull. That's a huge thing. We just do a soft credit pull, and we can look and see where you are. You're maxed out on this credit card. A lot of people realize there's a collection or a charge off they didn't even know about. So it gives them some time to go ahead and fight it, dispute it, argue with the person. So you might have a chance of getting your credit score up, 10, 20, 30, 50 points we see in a short amount of time, if you go ahead and you reach out to us early. But here you can see bond money, Broward, 90,700, Miami-Dade, 97,500. That's, if you have one or two people in the household. Palm Beach County is 92,000. Palm Beach County, you can see at the bottom, 105,800 if you have three or more people. So, it still isn't the 138 that we can do with Hometown Heroes. And it's also not qualifying income. It's the income of everybody in the household. So now there's a big one. Do you want to talk about that one? Is FHA dropping the mortgage insurance?
Yeah, we touched base a little bit about this. So it's not your upfront 1.75% that we're talking about. It's the monthly mortgage insurance. So where at one point, I know we did like well, you have an example right there. I was gonna say we did an example one time, but it's right there. But it does make a big difference on what you're paying on the mortgage insurance upfront. So Mike, I know has the examples on there, but if you look at the year, the monthly savings that you're going to be looking at, that pretty much tells us that we would be able to increase maybe the loan amount just a little bit. And even your monthly payments are going to make just more sense. So again, going back to what I said at the beginning, sometimes with these with the FHA versus the conventional, I think some of the FHA loans to me are kind of making a little bit more sense than the conventional because of the mortgage insurance being a little bit better. And I know Tom touched a little bit on the part where we talk about the credit and how we analyze and come up with this mortgage insurance premium. And yes, I think that this is helping a lot of people because I've seen the mortgage insurance premium on conventional loans be double, what FHA has right now. So
Yeah.
I mean, I've seen some of you got a buyer putting down 5% on a $500,000 house, $600,000 house, 5% down, and they're pulling a 640, 660. I've seen $500 a month mortgage insurance premiums.
absolutely.
On the private side, which gets a little bit costly. So it's certainly something that we like to look at.
Mm-hmm.
All right. So as we're on the screen, I had to do this. It's just driving me crazy here. So
While you're doing that, I'll reiterate on something that you said earlier. So a lot of people also are a little bit concerned with getting their credit pulled. I don't want my score. I have a score this, inquiry that, there, credit pull. We can offer a soft credit report. So we can order your credit report and there will be no inquiries on there. It won't affect your score whatsoever. And it'll give us a great idea on where you stand. So if you're a little bit concerned about having your credit score and your credit report pulled and the inquiry, we take care of that with no inquiry on there at all.
all right.
That's a big plus, I say.
There's a big plus.
Thank you.
All right. Now we're good here. So, you're still looking at 283. I mean, you're looking at $100 basically. You're looking at $100 a month of savings on a $400,000 loan, which is considerable. So $2,200, $1,200.
You were going to come by my house and give me $100 every first of the month. I'd take it.
Mm-hmm.
All right, let's get this thing. On a 15-year loan, I threw this up there just as it interests me. I've never in my 20-something years have done an FHA 15-year loan. I don't know if you guys have run into that, either one of you. So, all right, now this is interesting. This is getting a lot of political input too. So this is becoming one of the political things that everybody's arguing about. So you probably heard it on different screens. Where
But the way that we start the conversation is we're not making this political. That's the way Tom and I present it. Not to get political, but like this is what's going on. We're just here for the information.
Yeah. What's out there for our customers? What can we grab and help them? And the people that make these decisions, I know they're a whole lot smarter than me. They're a whole lot smarter than me. And I don't really care. If there's something out there and I can help my customers, I'm taking it. So if there's down payment assistance available there, I want the down payment assistance available. I'm going to get it for my customers. Nobody wants your input on. If it's out there, you get it for your customers. Now, you also have, they're incentivizing first-time home buyers, people that, before if you put little money down, it cost you a lot more. So your rate was higher. So your payments were higher. Everything was higher. Well, they've gone ahead and in this example right here, you can see that somebody putting 3% down, this is like a cost for a rate. So let's back up a little bit. When somebody says, hey, what's your rate? What's your rate? There is no rate. There's no rate. Everybody wants to know what's your rate. So you can have whatever rate you want. Whatever rate you want, for the most part, you can have. You can pay $20,000 and get your rate. But let's say that you have a rate of 6.5. Generally, if you got an 800 credit score and you're putting 40% down, maybe that 6.5 gives you $1,000 of money to pay for your closing cost. Now, if you got a 640 credit score and you're putting 3% down, now that same 6.5% rate might cost you thousands of dollars to get that 6.5% rate. So that's what we're looking at right now. So when we look at this one here, it's basically saying, and I just say $100,000 loan. So let's say there's a $100,000 loan and whatever the rate it is. But that $100,000 loan for somebody putting 20% down, it would cost them $375 for that rate. Let's just call the rate 6.5. But now that same person with the 780 credit score that's putting 3% down, that rate's only going to cost them $125. That's a pretty big, that's something of very interest, that somebody putting down 20% down is going to pay more for a rate than somebody putting 3% down. So we need to start looking at that stuff when we're talking to our customers is, you know, are we going to be able to help you a lot more by maybe putting a little bit less down? So let's come over to here, like when our rates start dropping. I'm sorry, when your credit scores start dropping. So here you have a 660 credit score. If you put down 3%, that $100,000 loan is going to cost you $1,250, $100,000 loan. Now, if you put down 40%, it's going to cost you $750. But if you put down 25%, it's actually going to cost you a little bit more to put 25% down. And look, I don't want to go already went too much into this, but I do want to back up and cover one quick thing. This part down here, these are loan level pricing adjustments, what we call. All these numbers are loan level pricing adjustments. If you fall within 100% of the area median income, Palm Beach County, I think is $92,000. If you are a first-time home buyer and you fall below that number, all this pricing on your first-time home can wipe out. All these adjustments can go away. So you're not going to get penalized for your credit. You're not going to get penalized for your 3% down. You're not going to get penalized for buying a condo. All this stuff can go away. So if you're qualified, what we call a home ready loan, loans to first-time home buyers with qualifying income less than or equal to 100% of area median income. And then you have other things like manufactured homes that fall under certain things, rural housing loans. These all have the ability to have all these loan level pricing adjustment waivers. All loan level pricing adjustments will be waived for the following loans. Now, home ready loans, very common for us. So first-time home buyers that fall within certain classifications or are buying in certain areas. So we might plug that address in, and that address says, hey, this is one of those magic areas. This customer is going to have no pricing adjustments. So they're going to have the same rate as somebody who has an 800 credit score and is putting 40% down on the loan. They'll have the same rate if they have a 660 credit score and they're putting 3% down. So that's a pretty cool thing in my industry, as long as we don't get pulled into the politics of it. So we're getting it for you. If it's out there, we're getting it for you. So.
And here's the other thing, Mike, that we didn't touch really on the bonds, hometown heroes, and all that. So somebody let's say we're doing hometown heroes, somebody that has an 800 credit score and somebody that's got a 640, which is your minimum amount that's needed, you're going to get the same interest rate. So if you're applying for these bonds and you're applying for hometown heroes, at that point we're not looking, because we're taking the interest rate, the program interest rate. We're not going by charts. We're not going by buy downs. You can't buy those down. It's for the actual bond. So we're given those interest rates that we got to go by. So somebody, I've been asked, if I have an 800 credit score and somebody else has a 650, you're still going to get the same interest rate if you're doing the Hometown Heroes program. So that's the other thing that, we didn't touch base on, but after, I heard the loan level pricing, then yes, I wanted to touch base on that a little bit, because one has nothing to do with the other.
Elizabeth's an excellent point, because what she's saying is, you're right. The pricing doesn't matter. Hometown Hero says what the pricing is. The Florida Housing says what the pricing is. Mm. We'll cover a little bit more of the good. I call the good, the bad, and the ugly. If you're buying that house and it's a short-term buy, you can have it for a year, then you're going to rent it, you're going to move, you're going to convert it, something. That $20,000 that you're getting from them that you have to pay back in a year, I don't know. You might want to think twice about that. Okay. So you may want to go ahead, if we can get you a little bit of rate or we can get something good, you may elect just to not grab that. So, right, falling underneath these pricing adjustments and having them go away may be something that we start looking at, and skipping the Hometown Heroes and doing that if you're looking at short term. All right. And here we have area median income for Palm Beach County, $90,000. All right. All right. Now this is for a class I did. I just say basically sometimes I'll get into the weeds of the money and the numbers. So I just say I try and summarize. If you fell asleep during my class, just pay attention. Here it is. Florida Housing is extending the Hometown Heroes to all first-time home buyers July 1st. The down payment assistance has increased on the Hometown Heroes to $35,000 starting July 1st. Mortgage insurance and FHA loans has decreased. We said to 0.55% from 0.85. And rates have improved for first-time home buyers putting little money down that fall within certain classifications. So that's basically everything we're looking at. And then I just always got to do a little good, bad, ugly. And I had to recognize FAU getting to the Final Four. FAU Final Four, Purdue #1 seed losing in the first round. So they got to fall into the bad. And then the ugly is my Gators, who just could not get into the tournament. So we'll keep the Gators in the ugly field for a little bit. So here we have our good, our bad, and our ugly is Hometown Heroes. You buy now, you save the money, and then you pay it back when you refinance or you sell. And that's versus saving the money and then buying down the road. So the good is that it gives you the opportunity to buy now. So you buy now, it gives you money, no interest, no payments. Most financial planners will tell you that's a pretty good thing. Someone's going to give you money, no interest, no payments, go ahead and take it. Now the bad, Tom, I'll let you cover the bad, huh?
Sure. So of course the loan has to be paid back when you sell the property. If you're going to refinance, in the next couple of years, they're expecting rates to come down a little bit. So if you're looking to refinance, yes, we're going to have to pay off that second loan. Again, it's no longer your primary residence. You decide to move out of that property and keep it as a rental or investment property, or has a change in the deed. In other words, a change of ownership. So those are the times when the loan has got to get paid back. And now we'll
to the ugly. So the ugly is just basically rates.
Appropriate that we have you do the ugly, Elizabeth.
You're looking to start the refinancing, and the house is not just appreciating. It's and you have not been able to save up money to pretty much pay this back at the moment that you're ready to do your refi. Then you wouldn't be able to take advantage of the lower interest rates again, just because this money has to be paid back. So yeah, those are the three.
Yeah, if it's going to be a short-term property, or if you're looking to flip a property, again, this isn't the program for you to use. It's not going to be beneficial for you in the long run. So that's why, if it's going to be your long-term property, you're going to keep it for several years. And again, maybe keep it down the road for investment property. And it's certainly a great program. But as Mike and Elizabeth pointed out, if you're looking to buy a property, fix it up and sell it within the first 12 months.
12 months.
12 months. Sorry. 12 months may not be the best program for you.
All right. All right. Just want to cover a couple things. And first of all, anybody that's popped in here, go ahead and always feel free to make some comments, ask some questions. We appreciate everybody who's joins, and we have a lot of people that'll watch it afterwards. And so want everybody to just feel comfortable to reach out to us and give us a call, but also just a weekly, just an update of what we do. Every Wednesday night at 6:30, we do home buyer classes. So you go to tmfclasses.com, you register for one of our classes every Wednesday night at 6:30. We do a mortgage basics for realtors first Monday of every month at 6:30. You register for there at tmfclasses.com also. We do a home buyer classes in Spanish the first Tuesday of every month. And is that, Tom, is that you doing those home buyer classes, or is it Elizabeth Almanza Lopez doing those?
Guapo Tom was doing it.
I think it might be.
Still speaks Espanol.
So,
Guapo's doing it, Tom?
the first Tuesday of every month, Elizabeth does home buyer classes for Spanish-speaking customers at 6:30, and that's also going to tmfclasses.com and register for that. And then every Wednesday, we do 30 minutes of Facebook Live. So go to our webpage, facebook.com, Wellington Lake Worth, and just hop in and join us. And love to have you just throw some questions in. And we just cover a different topic every single week.
And so share the page Wednesday. Sorry to cut you off. Share the page Wednesday. So please go to our Facebook page, share it with your friends, like it. Please, any questions, go to our page and share it.
Excellent. All right, guys, I appreciate it. Have a good week, and we'll see you next Wednesday, or we'll see you at one of our evening classes.
Thank you much.
Bye.